You buy Bitcoin, you hold it for more than 4 years, Joe. That's my advice to everybody.
Fair to say you simply flooded the system with money.
Yes, we did. That's another way to think about it.
Where does it come from? Do you just print it?
We print it digitally.
I'm very bullish on the long-term viability of Bitcoin.
I was going to say, did that surprise you?
That surprised me how much that's gone up.
Hey Internet, welcome back to another episode of New Foundations, the podcast brought to you by Acropolis, the Bitcoin Treasury company. Back in the studio again with Chase, my co-host, and we're joined by Samson Mow. Samson needs no introduction, but he's currently the CEO of game development studio Pixelmatic, as well as the CEO of JAN3, a Bitcoin technology company with a mission to accelerate Hyperbitcoinization. Samson is known for his work on El Salvador's Bitcoin strategy and nation-state Bitcoin adoption in general. He was previously the CSO at Blockstream, a leading provider of Bitcoin infrastructure, and before joining Blockstream, he was the COO of BTCC, or Bitcoin China, which was one of the largest Bitcoin exchanges and mining pools in the world. Welcome, Samson. Very excited to have you on the pod and have an engaging discussion today.
Yeah, thanks, Mason. Great to be here.
So I'll start us off, Samson. We had a little bit of breaking news this past week about the upcoming crypto summit at the White House on Friday. We saw Saylor announce or spread the word on Twitter that he's going to be one of the people speaking to the administration on Friday. So probably a long list of folks, maybe some not only from exclusively the Bitcoin corner of the crypto space. We saw the tweet from Trump announcing the crypto strategic reserve and unfortunately saw quite a number of tokens listed there, and Bitcoin unfortunately left out in that original tweet, but a quick fix follow-on tweet within the hour kind of seemed to appease the Bitcoiners. But what are you expecting to come out of this Friday session?
Well, there's a lot of expectations, I believe, because Howard Lutnick, he's also slated to be there. And I think he's heavily invested into Bitcoin. He has stated that there will be some word or maybe a reveal about what will be in the strategic Bitcoin/crypto reserve on Friday. But it's to be determined. I think the list of guests is very telling. And the name is Crypto Summit. It's not Bitcoin Summit. So you kind of have a lot of crypto altcoin people there, basically all of them, and a very small contingent of people I would qualify as Bitcoiners. So on the Bitcoin side, you have Saylor, confirmed, and then Paolo Arduino from Tether. I consider that a Bitcoin company because they're just using dollars to earn Bitcoin. He is in the unconfirmed list last I checked. And the rest is basically every other big crypto company. So we'll see. But I'm not that hopeful on a really good outcome. But I hope there is a good outcome.
I would say with Howard Lutnick owning about 5% of Tether through Cantor Fitzgerald, you'd hope he'd be able to get Paolo to appear. But we'll see.
Well, he stated publicly that he has a large amount of Bitcoin holdings, like in the 100 million range. Right. So he should be pushing for a strategic Bitcoin reserve. And I think he did say something along the lines of it'll be like a strategic Bitcoin reserve and there'll be some favorable things for other cryptos, but they're not in the reserve, which I think is the right approach. But either way, you either have a Bitcoin only reserve or you have a crypto reserve, and it has some component of altcoins in it. But I think the most important thing that we should all be pushing for is not to lobby for a Bitcoin only reserve, but to focus on the rule set and the criteria for what is actually included in there. And I took a stab at it a few days ago, I think Sunday night. But if you reason it out from first principles thinking and you think what should be in this thing, I think you end up with a list of just proof of work coins. And that's not that bad because it's still based off of something. It's not just like Ripple printing billions of tokens by pushing a button. And I think another criteria has to be that these things must be commodity-like and neutral. So they can't really be centralized tokens that are made in the US, because then no other country will want it. And that sort of defeats the purpose of having a strategic reserve, which no one else wants, right? So we'll see. I'm very curious about what is announced, because it could be a final list, but I would think that they need to put forth research and a proposal and criteria, which is vetted in the public eye, and then that is put forth to Congress, and then there's a order of operations to go through. But we'll see.
So speaking of nation states, internally we have better luck winning enterprise clients that are still founder-led. They're usually majority owners in the business because it allows them to act unilaterally. They're not needing to go and have a board of directors approve a Bitcoin strategy. Do you believe that JAN3 would have better luck working with dictators because of this same rationale, and also because of the sanction and censorship resistance of Bitcoin?
I would say in theory, yes, but that is not always the case. It is easier when a government or a president has a strong majority and control, and they can push something through almost unilaterally. So that is sort of the case with El Salvador, where President Bukele has the majority of the legislature or Congress, and he can just say, we're going to do this, and it doesn't really matter what the opposition votes. And that does allow you to do certain things like put forth a Bitcoin law. In other countries, like say Costa Rica, it's very democratic and very decentralized. There are a number of political parties, I think 6, and they're all roughly about the same size and power and influence. So it's very difficult to get something through there because you actually need a lot of consensus building. So that's why I say in theory, yes. But in practice, it's not always the case, because adoption of Bitcoin is the empowerment of the individual, which runs counter to the modus operandi of states that have a strong control. Like if you're thinking of a dictator, they don't really want the population to have unseizable, uncensorable, permissionless money. It doesn't really jive with what they're trying to achieve and maintain. So yeah, it's a complex, mixed answer.
Embrace the future of corporate finance with Acropolis, your strategic partner for a Bitcoin treasury strategy. We're the experts your business needs. Acropolis offers trusted Bitcoin advisory. We provide you with an outsourced Bitcoin strategy officer, world-class research, and a creative financing team, and more, so you can navigate Bitcoin's market with confidence and acumen. Best-in-class custody with multi-institution custody. Eliminate the risk of loss while maintaining full control of real Bitcoin. Acropolis exclusively uses multi-institution custody as the safest and easiest way for businesses to hold Bitcoin. Bitcoin-only solutions. The Acropolis platform is designed for businesses of all sizes to seamlessly manage their Bitcoin treasury, and we focus solely on Bitcoin to offer you the most specialized services available. Adding Bitcoin to your balance sheet is just the beginning. With Acropolis, you're not just adopting Bitcoin, you're mastering its strategic use to create and maintain value for generations. Take the first step and start your corporate Bitcoin journey with Acropolis. Book your free consultation today at acropolistreasury.com/book and start implementing our proven strategies within days.
Yeah, we, like Mason said, we have to try to build consensus amongst a board of directors, typically 5 to 11, 12 folks on a board. And I guess we know how hard that is just at the corporate level. And I don't envy trying to do it at the nation state level. So let me ask you, Samson, we know that you're a big fan of talking about price, and we'll get to some of those questions later. But if you could only track one metric for the rest of your life, including, using that as your metric that you operate your businesses based off of, when it comes to Bitcoin, would it be price or would it be some other metric?
Well, price is only a metric until hyperbitcoinization. And at that point, there is no price of Bitcoin. It's just sat. So, people like to joke at Bitcoiners saying 1 BTC equals 1 BTC. But there is some profound truth to that, because that's really all that matters. That if the world is priced in sats, which is Bitcoin, then nothing else really matters, because everything is using this system of measurement. So I guess the real measurement of Bitcoin that I would look at is adoption, like how many people are using Bitcoin, spending Bitcoin, and transacting it in economies around the world. And that's the difficult thing to measure because if Bitcoin functions as money, you should not have visibility directly. So it's sort of like a measurement that cannot be directly gauged, right? On-chain data is flawed because it only measures a certain dimension. And with Bitcoin layer 2s like Liquid and Lightning, a lot of that no longer is factored in. And Lightning has that privacy dimension to it, as does Liquid with confidential transactions. So it's almost like if Bitcoin succeeds, you're not going to be able to measure it empirically, but you're going to know because no one will accept anything but Bitcoin.
Okay, and so maybe pulling on this thread a little bit more, Max Kaiser is pretty well known for saying that hash rate precedes price. That's his view. That's why we, hear him often say, 2.2 million in play or 220,000 in play in the previous cycle. And so hash rate is really running away, expanding at really, eye-boggling rates. So are you a believer that hash rate precedes price? And if so, can you maybe explain the logic and why that would be the case?
Well, you could say that hash rate precedes price, and it is the case right now, but I don't think it is an indicator in the long run. Hash rate to me seems to more measure nation state adoption for mining, because while countries don't necessarily declare it publicly, they are mining. And that was the case for Bhutan. We didn't know until they kind of got caught because they were involved in the Celsius case, I believe. So they can mine. And the reason why hash rate seems to be on a tear, in my view, is that it's countries mining that are price insensitive. They don't really care about the price of electricity because they're behind the meter. The energy is their own, and either it's curtailed and run off, or they can just say, we'll use Bitcoin to mine, and it belongs to the state. So it doesn't matter really if the price drops or if the price goes up, because they will mine regardless. And I think this will continue to be the trend in the future, because energy production and Bitcoin mining are two sides of the same coin, because you need to be able to utilize energy. You have a lot of excess energy and you have to get rid of it somehow in certain situations. So energy companies will just become Bitcoin miners. And as we build more energy production facilities, then hash rate should logically keep following that growth trajectory. But there's also a danger, I think, to saying that hash rate and price are linked, because one day, maybe 50 years in the future, hash rate could taper off or drop off simply because it's not as economically viable to bring on miners to mine at that point when the subsidy is a lot lower or fees drop or various reasons. But that does not mean that the Bitcoin network is less secure, because it's almost as if we have an oversupply of hash rate, and the natural equilibrium could be a lot lower, and you can still have the same level of security too. So I think if you just say hash rate has to always keep going up, then you're opening the door for some future FUD attacks where the media saying Bitcoin death spiral because of mining death spiral. But we can actually make do with a lot less hash rate. It just means maybe you make smaller transactions per transaction. You're not transacting 10, 20,000 coins, but you break that up into 10 transactions of 1,000, and you wait for more confirmations. But the Bitcoin network is very resilient in that regard.
Many investors think that Bitcoin's volatility is going to dampen as the total size of the asset class grows, because of the law of large numbers. But we're also dealing with something that we've never really seen before, which is a truly finite asset emerging in prominence. At the same time, we're seeing massive government money printing and deficits. So my question is, what do you believe? Do you believe that Bitcoin's price will be more or less volatile on a percentage basis as we cross this $100+ trillion asset class that we believe it's growing into?
So my thinking is that we will become volatile until hyper-Bitcoinization, or maybe until we cross the 500,000 mark, 0.5 M. I don't really believe that there are diminishing returns for Bitcoin, simply because Bitcoin is a replacement for fiat money. So it's better to think of Bitcoin's growth as a phase transition from one state to another, from solid to liquid or liquid to gas. And it's just a replacement of a current system. So if Bitcoin does replace fiat, then why would there be diminishing returns? You don't really frame automobile adoption from the horse and buggy as diminishing returns. It is a phase change. We just went to automobiles and we stopped using horse and buggy except for recreational reasons, right? Like for fun. So if Bitcoin, it does do what I think it will do, then you kind of just replace everything, and everything is on a Bitcoin standard.
And you're pretty well known for speaking about how that phase shift is going to happen rather rapidly, as everyone just all of a sudden realizes that, if you're a merchant, you want to accept Bitcoin for payment. If you're an individual, you have to protect yourself by holding Bitcoin as your store of value, and that this is how we run up to your, pretty popularized $1 million price target. I'm curious, when that happens, when we see that sudden jump up in price, which other asset class, ideally you would say something not in the crypto asset arena at all, but what other asset class do you expect to run up most alongside it?
So my theory is that maybe some Bitcoiners won't like this answer, but I think gold will run up, because the trading pair of the future is not BTC USD, but BTC XAU. Because at the very least, gold is a relatively finite asset that you can't manufacture out of thin air. The exact verifiable quantities, it's kind of TBD, but at least it's better than everything else. So I think if there is trading of Bitcoin, it's going to be against the ounces of gold rather than against dollars or yen or pesos. So with that in mind, you could expect gold would probably have a run. And maybe with the push for things like auditing Fort Knox, we actually have a better visibility on who has gold, and we kind of level up a bit. I think Tether and their product, Tether Gold, is probably a step in the right direction. They are far more stringent on how they're managing and tokenizing bars of gold than what is currently used to trade and value gold on traditional markets.
Maybe just to double click on that, that's interesting, because I know you're a believer that kind of all fiat currencies eventually land in Bitcoin, but I would have expected maybe that you would feel the same way about gold's market cap, because the narrative is just maybe perhaps even easier for the everyday person to understand that this is a better form of gold. Therefore, if I have gold, I should sell it to own Bitcoin instead. I think it's a bigger leap for people to kind of understand the money printing and monetary debasement and why they need to hold Bitcoin. So you sound like you believe that gold and Bitcoin are going to appreciate as asset classes together for the foreseeable future then.
For some time, because gold has a large, let's say, large place in society, and it does have history. So I don't think it'll disappear overnight like everything else. I think it'll hang on to the financialization aspects for some time. But I think Bitcoin will also demonetize gold when we hit probably 500,000, because at that point we're roughly half of gold's market cap. And the more modern thinkers or in investments and funds and institutions will likely start to reassess and reevaluate their gold holdings relative to Bitcoin holdings. So it's likely that we will demonetize some of gold's market cap. But gold, I think, will still hold out better than everything else. So I think it should revalue itself a bit more.
I'm excited for this one because it's one of my personal biggest concerns, to be honest, and we get it a lot from clients internally. So curious if you've heard of this idea of a friendly 6102 in which the government raids Bitcoin holdings of MicroStrategy, now known as Strategy, but gives MSTR shareholders a premium due to their current share price and allows them to cash out without capital gains tax. Do you think there's any chance that the U.S. government attempts to confiscate Strategy's Bitcoin treasury? And do you have any thoughts on what this would look like and the likelihood of this?
That's interesting. So, Mason, where did you hear that one from? I haven't heard it before.
I think I brought this to Mason's attention. I first heard it from Rai Quant from the MSTR True North gang. And yeah, the idea is a friendly 6102 in that, yes, the government comes in and confiscates the treasury, but they're paying above asking price and they're letting you leave with those shares and sell out into fiat without incurring the capital gains tax. So like a super friendly exit landing pad for MSTR shareholders. But ultimately allowing the government to seize the coin.
Well, in theory, it sounds friendly, but you have to ask yourself, if the government is in a predicament at which they need to do that, I don't think anyone would want the alternative. Like, sell Bitcoin for what is something I post from time to time. But, why would you want the dollars if they're in such a dire condition that they need to seize the strategy Bitcoin? So I guess that's the answer.
I think it's similar to the historical 6102, where the government buys back the gold from you, and then you ideally, if you want gold or some other store of value asset and you want to get out of the dollar, you can do so quickly. But you obviously would have to race the government because they're going to revalue that seized Bitcoin up as they did with the gold reserves.
Yeah, I guess it's just a question. When 6102, the original 6102 happened, the internet didn't exist, so you can't really hear from dissenters and they can't coordinate. So it's just a question, does that work in this day and age, that you can do something like that and pull it off? It's a really TBD question, but I go back to it, if the government needs it that badly, you probably don't want the other thing that they're trading with you for. But then people that do hold MicroStrategy are kind of okay with that Bitcoin being financialized. So maybe it's okay for them because they're viewing it as part of fiat world, right? Otherwise, you'd hold Bitcoin, you'd hold spot Bitcoin proper in your own self-custodial wallet.
Right, because MicroStrategy shareholders, they're believers in the Bitcoin per share going up over time, but ultimately they understand that they have to cash out into fiat and then back into Bitcoin to ultimately end up with more Bitcoin than they would have if they just held Bitcoin. So it's not actually that different than what the average MicroStrategy shareholder intends to do in the future anyway. And maybe, no capital gains and a premium on current share price might actually be an interesting offer to many MicroStrategy shareholders. Not me. I'd like to hold I share hodl long term, but anyway, just something for you to think about as that treasury just continues to expand and expand, and as Saylor gets closer and closer to the current administration.
I did see some tweets out there that said Strategy is the U.S. strategic Bitcoin reserve, so it's not impossible.
Yeah, yeah, exactly. So kind of staying on this line of nation states, obviously something that you're working on every day at JAN3, we see the rise of discussion of the BRICS currency. And, the reason for these countries to do so is to get out of a cross-border payment method that requires U.S. or SWIFT oversight and, basically be free operators amongst those trade routes with their partners. And we've seen the discussions, I think it's been going on for a few years now as they try to navigate the rise or creation of this BRICS currency. But obviously, each of these countries has their own balance sheet strength. China brings their own value to the table. Russia their own, and that's obviously a larger economies than South Africa or Brazil also in the deal. And so you have to ask yourself, well, then who has access to print the BRICS currencies, and is it going to be proportionate to their GDP or some other thing? So it becomes, on a high level, it sounds interesting for these nations to be approaching this, but in practical terms, I find it very difficult to see how they would come to a conclusion that satisfies all parties. And meanwhile, they're watching the rise of this neutral digital asset for cross-border trade, Bitcoin. And so I'm curious, do you believe that the BRICS currency discussion is ultimately going to fall flat and these countries are going to turn and resign to using Bitcoin instead? And if so, how much longer do they need to watch Bitcoin work in parallel before they just realize that that's the solution right underneath their nose?
Yeah, I don't really see the point of a new currency, and it kind of you can kind of compare it to, like, let's say a failing state relaunching their currency. Will the citizens accept that reboot when there is an alternative like Bitcoin or even stablecoins for that matter? I think the answer is no, because the reason countries can get away with reboots in the past is because there is no alternative. But with the dawn of Bitcoin, you can opt out. So I think it's hard to launch something like a BRICS currency in this day and age, where the political aspect of it is also something that cannot be ignored. But that's even more precarious right now. Like the trust that is needed to establish something like a BRICS currency is not something you can project out 10, 20 years. Are those alliances and relationships still going to exist? I think it's a big question mark. So the future of the BRICS currency is definitely an even bigger question mark. That is, if they can get it off the ground. But maybe it's just a nothing burger. Like, a lot of countries like to say they are working on a CBDC, and it's not necessarily that they want to enslave the population or control everything. Definitely a possibility and something we should be cognizant of. But they can also just be saying we're doing something to say they're doing something to look like they're on the cutting edge and relevant and high tech. And maybe it's the same with the BRICS currency. It's just we're doing something, and that's something they know will not work either. But ultimately, all these countries are going to use Bitcoin because their people are going to use Bitcoin. And governments usually end up using what the people deem valuable. They can't mandate value. I mean, that's what fiat is, and fiat has been failing for the last 100 years, a couple hundred years.
You can't say something's valuable just because you say it is. It has to actually have something behind it, which is a common criticism of Bitcoin, but we understand what actually goes into Bitcoin, the proof of work required to create those tokens.
You can say something is valuable and dictate that for a limited time, but usually it fails, right? That's the case for the dollar going off the gold standard. It lasted quite some time, but it's failing. The yen is failing. Everything is failing because it doesn't work.
And with information moving at the speed of light, this failing is accelerating.
Yeah, and Bitcoin is information too.
Exactly. We touched on this earlier in the episode, but we saw recently Trump tweet about a strategic crypto reserve. The initial tweet didn't mention Bitcoin, but focused on these crypto tokens. He quickly corrected it with that follow-up tweet. But my question is the following. Do nation states need to shitcoin before they Bitcoin?
It would seem like that's the case, but yeah, I hope some sense is made at the crypto summit or when the criteria for the reserve is defined. But it's just depressing that in this day and age, people still need to go through a shitcoining phase. But it speaks a lot to motivations. Like even what happened in Argentina with Malay's Libra endorsed coin. You don't know for sure if he was involved, but if he was, then it speaks a lot to the incentives that printing money can give and how that can influence people.
Perhaps this is kind of in line with your previous point, which is that governments are going to find valuable what their people find valuable. And maybe the United States is going to be one of the more likely to use these alternative tokens because our payment rails are sufficient enough for most people's needs, whereas perhaps an African country or a LATAM country, the people find more value in Bitcoin and stablecoins because they have a real pressing need to store value or transmit value. And so maybe those countries, when they create their strategic reserves, they're going to look at what the people find valuable and they're going to replicate that, which is interesting from kind of a representative nation state of the people perspective. So perhaps United States is going to have the shitcoin reserve because we're just too privileged with our current financial rails.
Yeah, or the incentives are to push through the shitcoin reserve, right? There are a lot of lobbyists, donors, and you cannot discount that being an influence because they are money and politicians need money to campaign and stay in power. So I think there's a deeper conversation to be had about systems of governance and how we can make them more anti-fragile. Like, there's always talk about outside interference in elections, but if the whole process is so fragile and brittle, maybe we need a more consensus-based system that is immune to outside interference. Or you need a better education system to teach people about thinking for themselves and critical thought.
Well, speaking of outside influence, the IMF, the International Monetary Fund, we're reading headlines here, and you're on the ground in El Salvador, and obviously very clued into how the administration thinks about the Bitcoin strategy. So hopefully you can shed some light for us and our audience. But the IMF is apparently urging El Salvador to cease its Bitcoin purchases, where they're buying at least one Bitcoin per day. And you can track that all on chain. And they're urging El Salvador to cease these Bitcoin purchases as part of a $1.4 billion loan agreement. I'm curious, do you expect Nayib Bukele to blink and change course at all? Do you expect him to make a public stink about this and almost have it splash back in the IMF's face? What are you expecting the reaction from this to be? Because I know it's not the first time that Nayib Bukele and the IMF have kind of faced off on this issue.
Right. So just a disclaimer, I'm not in El Salvador, and I haven't been involved with the government for a number of years now there. We've been focused on getting more Bitcoin adoption around the world rather than just doubling down on one place. But it's a really big question mark, and there are a lot of Bitcoiners that are questioning what exactly is going on because the communications has not been clear at all about any of the things going on, right? The amendment to the Bitcoin law was kind of just slipped through on like a Friday night, and then there was no commentary on why the changes were happening or what exactly it means. And then all of the IMF news has largely come out from the side of the IMF and with no official commentary until yesterday when President Bukele tweeted that there is no stopping, they're going to keep buying. But the question really is, what is the reality? Because the agreement with the IMF is not written from the perspective of the IMF. It's like a joint document where it's written in the language like we, El Salvador, are going to do these things. And it's just conflicting with the message that they're going to keep buying. I hope they keep buying, but it just doesn't really compute for a lot of people. And I think it could be easily clarified by saying, this is non-binding, or there is a loophole, or even we intend to break this agreement because it's unjust. But it's the kind of messaging we're getting is just like, trust us, and we're going to keep going without any clear indication of how to keep going. And it's also compounded by some other aspect of what El Salvador seems to have been trying to accomplish, which is become a major financial center. And I don't believe that you become a major financial center by playing games and creating agreements that you enter into willingly to break. It does not set the stage for rule of law and stability. I don't know what your take is.
It's hard for me to believe that he's going to stop buying at least one Bitcoin a day, and it feels to me that they're capable of maintaining that rate for the foreseeable future, regardless of using the money from this particular loan agreement. But I agree, you can't really be a financial hub if you don't mean what you say. And if they take on debt with the IMF under express purposes, they're going to have to honor that. But maybe they're going to somehow carve out that capital for, other operational growth and programs and keep doing that one Bitcoin a day. But it did seem like, and maybe this is just Bitcoin Twitter, because I haven't dug in here, but it did seem like the last round of capital that they got, when the money came in, that's when they started making their 11 Bitcoin purchases per day, seemingly the same moment, and almost like a signal that, if you're going to lend El Salvador money, the more you do, the more Bitcoin we're going to start buying. I don't know if you caught that.
Well, I don't think the money is hit yet. The deal didn't finalize or is not finalized, to my understanding, and I think this is why there are people questioning also like where are the funds coming from. Joe Nakamoto, he's a journalist and someone pushing for Bitcoin adoption. He's asking, well, is this transfers from other wallets? And again, there's no response. It would be very simple to clarify in saying these are buys, not transfers from other government-controlled wallets that are part of other programs that earned Bitcoin in the past. But I mean, everyone can believe what they choose to believe. You can say they're spending IMF money right now already, or they will. But the terms of the agreement are very detailed. It's 111 pages, and if you read it, it digs into a lot of things, and it has a very comprehensive ring fence around what can and can't be done with a lot of minutia. So that's why I think people that have read it are questioning things. And I think if they're within their rights to ask questions, especially if they did move to El Salvador and this is where they're living their lives, they should be able to ask these questions.
Yeah, maybe a last note here, Mason, because I know we're going to wrap here in a second, but this just reminds me so much of, on a microcosm, the companies we work with, when they move towards a Bitcoin strategy, the level of investor relations and corporate communications and employee Q&A webinars, and just like how much communication you have to over communicate the strategy to your shareholders and your stakeholders. And hopefully El Salvador and Nayib Bukele can do more than just kind of posting thumbs up memes and come out and explain what's going on here. But yeah, thank you so much, Samson, for coming on. I know we want to make sure you have a chance to share where people can follow your work.
Sure. I'm on Twitter or X as Excelion, and JAN3 is just JAN3.com. And you can also find our website at jan3.com.
Excellent. Thank you so much, Samson.
Yeah. Thanks, Chase. Thanks, Mason.
Thanks, Samson. Thanks for listening to this week's episode of the show. Quick reminder that New Foundations is for informational and entertainment purposes only, and nothing should be construed as investment, financial, or legal advice. Business owners, business operators, and those who are Bitcoin curious, let's connect. Visit acropolistreasury.com to learn more or to get in touch with our team.